the official cash rate doesn't directly impact most interest rates. It indirectly impacts most interest rates, but it is a good guide from the Reserve Bank about where they want interest rates to be. Banks actually don't fund themselves from the Reserve Bank. They fund themselves in the overnight international money market, and the swap rates, which is what banks price at overnight and actually get their money to lend from, or some of it, that has been steadily decreasing over the last probably month. And that is because the future expectation at the price of money, the future expectation that the official cash rate will drop, has been building and building and building. And more people are saying, nah, it's going to drop, it's going to drop. So that forces the price of money down. Welcome to Checks and Balances, brought to you by Partners Life. I'm Michael Vincent. This is James Blair. And today, interest rates.
Interest rates.
Interest rates.
We're back in your life to talk about interest rates. Now, Mike, if you talk to any household in the country right now, the one thing that they are talking about at the barbecue is life is hard. Why is life so hard, Michael?
Life is hard because the Reserve Bank doesn't want you to have any money. No, to be honest, life is hard at the moment because mortgage rates are significantly higher than they have been for a long time in New Zealand. You combine that with the amount of debt that Kiwis took out to buy houses around that kind of 2019, 2020, 2021 era, and boy, oh boy, oh boy, there's not a lot of money left in your pocket.
And this whole thing was designed by the Reserve Bank. So if we look at what happened, so I'm going to take you all the way back, Mike, to 2008. So 2008, the global financial crisis. We go through that. It wasn't a great time. Then off the back of it, we had one hell of a run.
Yeah.
From 2008 to 2020, times were good. You know, New Zealand was referred to the rock star economy. Life was good. Markets were up. Property markets were up. But we know that, you know, good things can't last forever. You know, markets are cyclical. We will go through tough times. COVID comes along and we go, all right, guys, it was a great run. We need to go through a tougher time. And the Reserve Bank turns around and they go, Mike, I know it's 2 a.m. I know I should go home, but I don't want the party to finish.
We're doing that. We're doing the Alamo. We're doing the last stand at the kitchen table. Yeah.
Adrian all with like a tie around his head.
They did indeed. So they dropped rates super, super low, right? Artificially low, in fact, for what they should be in New Zealand. So we're talking 1.99, 2%, 2.5%. You should not see those interest rates in the New Zealand economy. If you do, things aren't going well.
It's crazy to think about that time compared to where we are now and where interest rates are. And I remember like them being like, the OCR isn't designed to go negative, and banks were like, we don't have the functionality.
We literally can't put it in the computer
to make a negative interest rate, and the impact on, you know, we're talking about like money going into term deposits, and you would get less money at the end than what you had.
But that was still preferable. Because everything else out there was super high risk.
Yeah, didn't want to be in the share market, didn't want to do anything. And you look at what happened to the share market over that period of time. So, Mike, we were at those low interest rates. Unsurprisingly, there was a lot of concern about what might happen to property values. Surprisingly, low interest rates means that people go and buy a whole bunch of luxury items, go and buy a bunch of cars, house prices go through the roof, and this little old thing called inflation comes knocking.
Yeah. The analogy of a party and a hangover is so apt in this instance, right? And I don't want to say, you know, it's not just people going out and buying, you know, jet skis and Rolexes and these sorts of luxury items, you know, and spending frivolously. It is also your regular asset classes like property, you know, like the share market, you know, just that hyperinflation in there as well. And we really clearly saw that in the New Zealand property market. But that eventually trickles out into everyday items, right? That inflation and the cost of things going up. And for such a long time there, even, you know, there was a new class of economics that came, like modern monetary theory or something. We're like, no, inflation's dead. Like, you know, we've had super low interest and everyone was like, oh, maybe that's a thing. And, you know, I remember having a chat about it with someone at like an event or the pub or something, right? And like, probably gives you an insight into my chat. But you know, like,
it's not great.
It was literally, you know, those were the thoughts. However,
they were wrong.
Death, taxes, and inflation is going to come bite you in the ass. And boy, did it come roaring back, right?
Yeah. So I think it was probably like the middle of 2022.
Yep.
Inflation got to its highest point of 7.2% per annum. And, you know, the Reserve Bank turned around and was like, we need to do something about this. So what do? They they got the OCR up, interest rates went up a lot. And, you think about on $1 million of lending, right? Maybe you're at 1.99%. You're paying about $20,000 a year of interest. At the peak, what we're about 7.5%.
Pinch over, yep.
Yeah, that's $75,000 a year in interest. Over that period of time, or 2 or 3 years, those families that took out those mortgages, they had to find an extra $55,000 a year, nearly $5,000 a month of cash flow. No wonder it's put so much stress on everybody, and it's done exactly what it was meant to do.
Yep.
We've seen that. People are spending less money. We've seen it flow into property prices dropping in some parts of the country like 20-odd%. We've seen it in businesses struggling and, resulting in the unemployment number going up. But over time, we've started to see that inflation number move down all the way down to, over the last month or so, it's now sitting about 3.4%.
Yep.
So, Mike, this is where you say to us, that yes, it's been tough, James. Yes, that hangover has gone for a really, really long period of time. But please tell me it's about to get better.
Yeah, it's like Adrian Orr's just given everyone a Powerade.
Yeah.
And he's like, we're going to have a greasy feed, have a Powerade. We're going to be back.
What's your go-to Powerade flavor?
Yellow.
Yellow? I'm actually...
It is easily the most medicinal of the Powerades.
George is giving it like mad disrespect on the camera. Mine's actually... I like the Powerade Waters. I think it's like
you ordered one of those in Wellington.
It's like an apple one. It's a clear one. Because you've actually said to me once, what is Powerade? It's blue. Like, that doesn't make any sense. Like, what's in it for you?
Yeah.
But anyway, we're getting distracted.
Cool.
So, anyway, Adrian Orr was like, here's a couple of Panadol. Here's a Powerade. Here's a McMuffin from McDonald's. Before we move on, we talk all the time about planning and growing our wealth, but protecting that wealth is just as important. That's why having the right insurance in place can help when life goes unexpectedly.
And that's why this episode is brought to you by Partners Life, a New Zealand operated award-winning insurance provider with over 300,000 Kiwis insured and 89% of claims paid.
Partners Life understand that having some insurance is better than having no insurance. They have flexible and personalized solutions for any budget or situation.
Check out their website in our show notes below. But what he said with that is, it's not going to be like, you're not going to feel better straight away, right? So he's dropped the official cash rate. Now, the official cash rate doesn't directly impact most interest rates. It indirectly impacts most interest rates, but it is a good guide from the Reserve Bank about where they want interest rates to be. Banks actually don't fund themselves from the Reserve Bank. They fund themselves in the overnight international money market, and the swap rates, which is what banks price at overnight and actually get their money to lend from, or some of it, that has been steadily decreasing over the last probably month. And that is because the future expectation at the price of money, the future expectation that the official cash rate will drop, has been building and building and building. And more people are saying, nah, it's going to drop, it's going to drop. So that forces the price of money down. However, the actual drop in the official cash rate will directly impact floating interest rates. So you've seen all of those come down pretty much straight away. It'll affect most of the other interest rates as well, as banks go, cool, now's the time where we can start dropping. We can get more competition back in the market. We can actually start fighting for business again and actually lending some money. Because you remember that banks have interest rates, and then test rates are a margin on top of those interest rates. So if your interest rate comes down, your floating rate, so does your test rate, which is great news for borrowers.
So it's quite interesting what you just said, that the OCR isn't, the be all end all.
Yep.
A lot of it's around the swap rates and banks passing money between themselves.
Yep.
You mentioned swap rates have dropped over the last month or two. Just roughly, where were they a couple months ago, and where are they sitting? Like, how much have they dropped?
It depends on what one you look at. They go from 1 to 10 years. So we usually look at the 1 and 2 year swap rate and the 10-year swap rate to get a guide on what's happening. I couldn't tell you off the top of my head. I think they're like sub 4.2 or something now. But they've definitely dropped like 0.5%, over the last 6 months. Yeah, it's been a pretty substantial drop.
Cool. Because, if you think about it, like, its peak, like, interest rates are sitting at like a 1 year fixed rate, we're sitting at like maybe 7.5%. Yep. What's a 1 year fixed rate sitting at now?
6.65 is probably your average 1 year fixed interest rate, and there's a pretty good guide because most Kiwis fix for 1 year.
Yeah, so if you think about it, right, so like the OCR's only just dropped, but the 1 year rate's already dropped 0.9% roughly, which shows that things were already starting to head in the direction.
Yeah, 100%. So the reason why we're talking about this today is this is, again, great news for the economy, but what should you do off the back of this, right? And if you've got a mortgage, what are you thinking? So this is not personalized financial advice.
Yes, it is.
If you have a mortgage and it is rolling off and you are wondering what should you do with it, here is Mike's tip. And you can take this to the bank. You should go and see a mortgage broker and talk to them about what you should do, because I can't give you personalized advice.
Is it
on this.
painful sitting on the fence like this? Is it uncomfortable?
James, I can give you personalized financial advice.
Okay, how long should I fix for, Mike?
James, I know you've got about 500K rolling off soon, and I've recommended that you fix for 6 months.
Do you know what's depressing about that 500K rolling off on Friday?
What?
It's sitting at 2.99%, and I'm going to be jumping to 6.8% or something like that. I did the math on the difference. It's $700 a fortnight.
Yeah. So look, in all honesty though, James's situation as James's mortgage broker, I can give him personalized financial advice, but it may not be correct for you to fix for a 6-month period. But where we are at in the interest rate cycle, we're definitely past the top and we're on the way down. So if you think about that, you don't really want to be fixing for long terms, because what looks like a good interest rate now, because even those 4 or 5 year interest rates, they're sub 5. They're 5.99. So you might be looking at that and go, whew, pretty good. I would say probably in 2 years, you'll be turning around looking at that and going, eesh, nah, didn't do the right call there.
Is there any scenario where fixing for 5 years makes sense?
There's always some scenarios where fixing for 5 years makes sense, but that is going to come down to the individual's circumstances, like what's happening. You might be moving overseas and you might just be wanting to lock in like some budgeting stability or cash flow stability on your investment. You might have a commercial property, and that might be a reason that you want to fix for that 5-year block to align your rent with the interest rates and these sorts of things. Yeah.
Cool. Okay, let's move into our predictions.
Yeah.
I don't know why that was a little bit spooky like a ghost.
Yeah.
So I want to go through a few predictions.
Cool.
My first ones I want from you
Yeah.
is what is going to happen to the OCR for the rest of the year. So
I got this wrong.
I got this wrong.
I got this wrong. I said he wasn't going to cut, and that he was actually going to hold off to the end of the year and do a 0.5 cut at the end of the year. But I think we actually had I think Karen Silk maybe pulled out the knife and was like, mate, come on, you got to do this, or we're going to have to fight our way out of the beehive. Yeah.
So we've got a couple more OCR announcements left this year. What do you think is going to happen to the OCR?
0.25, 0.25, 0.25, 0.25.
Sounds very similar to Jared Kerr's predictions in terms of the Kiwi Bank chief economist. Okay, next question.
Yeah.
Where will a 1-year fixed rate be sitting by the end of the year? What is your prediction?
6.16. Oh, you probably get like a special at 6%. Yeah.
Nice.
Maybe 5.99.
Okay, and then if I was to get the crystal ball out, Mike, end of 2025, where do you think interest rates will sit?
So a 1-year fix, probably like high 4s, 4.8, 4.9 on a special. Yeah.
I'd love that right now.
Yeah. Well, there's no point in holding them high, because if what you're trying to do is pull inflation out of the economy, and you pull inflation out of the economy, what are you doing?
Yeah.
Just you may as well let people get on with it. And you don't want to just go, cool, 2% interest rates again, because you will be the exact same lumpy scenario that we've been through with the COVID. And you can't blame him 100% for his response to the COVID, pandemic and the disturbance that caused in the economy, because hell, no one had been through that before, right? But
it's easier to blame someone else than looking at yourself, Mike.
Yeah,
you know this.
It is, but I think I would say it'll just be continually chipping away at it, easing it off. Interest rates will come down. There's a lag on all of these things as well. People we fixed on 2 years and 3 years and 1 year, so it won't all just kind of rush off back to the races. But definitely good signs.
Yeah, and the big thing with all of this, right, is we're just so short-sighted where we think, when good times were happening, we're at the top of 2021, we thought it would last forever. Bad times happen, we think 7% interest rates, New Zealand is screwed, times are tough, nothing lasts forever. And it is very nice to hear that we have those signs that things are getting a little bit easier.
Yep.
As we wrap it up, what tips would you have for those who do have a mortgage rolling off?
Yeah, 100%. So this is, again, my actual tip. Go speak to a mortgage broker, right? It is impossible for me to give you financial advice in this scenario, because I have no idea who you are, what your situation is, how much debt you got rolling off, what the cash flow is in the household, plans you got coming up in the future. is something going wrong? Is something going right? Are you getting a pay rise? A lot of stuff goes into giving people advice on what they should do with their mortgages. So yeah, that is my actual advice: is go speak to a mortgage broker.
Nice. Okay. Keen to hear in the comments section where we think interest rates will be at the end of this year and the end of next year. Guarantee you, Mike, there will be people hanging around the comment section saying interest rates are going back to 10% because New Zealand is screwed as well.
Buy gold, buy silver.
Yeah. Much love to Partners Life for sponsoring the episode. Please make sure to subscribe to our YouTube channel. We're getting heaps of good momentum there. So make sure to subscribe and follow along there. Give us a review, give us a like, and we will catch you next time.
Cheers.